Alright guys, today is the first day of the little challenge that I decided to take, which is to take about 100 trades and starting with a very low account for Forex and trying to build it up as far as I can in as little time as I can. Well, I'm not going to exactly rush it. It's not going to be like a scalping, like I'm going to have some position trading in there, and like I won't push myself to the limit, but my goal is just to complete the 100 trades and see what happens with the small account with over leverage, because this is taking way too much risk compared to what I usually take on my accounts. So the account was an old account that I had in my at one of my brokers that I use for testing on a small scale some strategies, and it's been sitting there for a couple of years now, and I haven't done anything with it. And when I saw a video of people taking a $20 account and trying to build it up to like 50,000, I was like, well, that's interesting. I don't think it's reasonable, because the way they were doing it was they were taking 30% risk and making 30% in returns every time they had a successful trade. But I think it's highly reckless. The only application for this is if you're trying to trade on the demo account and you want to practice discipline and practice doing the same thing over and over. But even if you're doing that, I think it's better to take good habits from the get-go and take less leverage. Right now, at this $200 level, the max leverage I'm willing to take, well, the max risk I'm willing to take is 10%, and I'm trying to already to reduce that to around 5%. And as I build the account, if everything goes well, I'm going to reduce that all the way up to 2%, maybe even 1% eventually per transaction, and maybe start building multiple positions on the same pair or on the same commodity, but at different times, so I can manage my risk and manage my position, which is more in line with what I do nowadays. So my goal with this experiment is to try to demonstrate to someone that has never done any trading or has never applied themselves to say try a strategy for 100 trades and see and check out the statistics and see how it fared. So my goal is to help those that are new or even experienced try to learn from their mistakes, and the way also that you can use different platforms to learn from your mistakes. So the first two trades are in. They're over here. This is live. We are October 24th, 2022. And the first position I took was the Great Britain pound. So let's take a look at the chart real quick. So what I saw here is that if we look on the weekly here, this is a very long-term chart, but let me just change that a bit. Is that we have a formation that has been broken out of, and right now we're kind of accumulating, and what it did is it broke out of that position of that pattern, and then it accumulated, and then it went to test that that support over here, the old resistance that became support, and now it kind of held over there. And if we zoom in on a 4-hour chart, it looks like this. So to me, this is very to me, this looks a lot like your reaccumulation pattern of the Wyckoff method. In broad strokes, like this is not by the book, but you see here you have the big bear trap where a lot of people that try to short here and they got trapped, so that it makes everything rebound really quickly. And now I believe this is similar to an SOS type of pattern where all these resistances over here are being tested, and because it got it went in there and got rejected right away. For that reason, I decided that this was a good enough entry for me to enter a position. And as far as the target, what I decided to do was to do a 1-1, like the length of this up thrust basically is the length over here up to point D. So from this entry over here, my target is over there. So what I'm trying to do here, and I've put it a bit lower so I can get a fill, even if it doesn't reaches the point D, doesn't matter. So what I'm trying to do here is to have a slightly bigger target than I have risk, so that the odds eventually start to work in my favor. Keep in mind that this $200 might disappear in a couple trades as well. This is highly risky. I don't recommend people doing this unless they're trading on a fake account, like a testing account, basically with fake money, because it's too much leverage for this type of position. Usually, I would at least have a couple $1,000s in the account to risk a lot less. But this is the challenge, basically, to try to build this up. Let's say I was starting and I had only $200 to my name. This is how I would start doing this. So this is a Great Britain pound. So now let's look at the Euro Australian. So this pattern is a distribution pattern that I've seen quite a few times. I think I made a video about this one. But basically what it is it's an expanding wedge, basically. And what happens here is that price tries to go beyond this high and fails and is rejected right away. And I don't know if I did it right over here. And basically what I'm trying to capture here is the fact that this rejection here is going to go, in my opinion, minimum to the mean reversion of this to the middle point of this support and this resistance, so the orange line over here. So I'm banking on that. So far it's doing pretty good. If we look, I'm 15 pips in already on that trade. So we'll see if we can get a fill. Maybe well, this is 1 hour chart, so maybe maybe tomorrow I'm gonna get a fill on this, or it could also reverse in my face, and at which point I will look for a long. But I've traded this type of pattern quite a few times in my life, and sometimes on bigger time frames, and they're very reliable because it's a supply shift, basically. As price tries to go over here, there's people selling like crazy, so the rejection is very obvious. So these are the first two trades, and I'll keep you updated for the next couple trades, maybe tomorrow or the next day. All right, guys, this is the next day. I'm waking up, well, I woke up a few hours ago, but I wanted to give an update for my first two trades and tell you the thought process that is going through my mind right now. So the first position over here, the Great Britain pound versus the yen, is up over 120 pips so far in that area. And what I do in these situations, whenever a trade moves in my direction by quite a bit, maybe let's say 50 or 60 pips and above, and it's been over 12 hours since I entered a trade, usually what I'll do is I'll protect my entry. What this means is I move my stop loss from a negative territory to a flat territory. So if the price was to reverse, I would just get out flat, and plus I'll try to cover the fees as well. So that's what I'm going to do now. I entered at 168.18, so now I'm going to move my stop to at least 168.18, and then I'll see if I can cover the cost. So right now I got 14 cents of commission, some roll fees, so I'm gonna move it up and try to cover that for a day or two and reassess the situation. Whoop, this is the limit, so this is not what I want to do. So I'm going to copy this, cancel, click on the stop, and move it here, 168.28. So I got a potential of $42 in profit on this trade, and right now my minimum profit is going to be 48 cents, but that's going to go down as the fees start to rack up in the next couple of days. So let's update this. All right, so now I've got I just freed up some capital, basically, not technically but theoretically. And then the other position is 29 pips in profit, 28, 27. So it's all right, but let's look at the charts real quick. So right now we have we had a test over here of that resistance. So it went down quite a bit, and then it came back to test this this zone here, this resistance. That seems to be working so far. It looks like it wants to turn here on me. So what I usually do in these situations is I'll look at different time frames to see the shape of the candles. So you see this is positive. This is this candle over here. I don't want to remove this, but the second candle with the long wick over here. This is very bearish. It means that that price has been rejected aggressively. So I expect that between the next 4 to 8 hours from here, especially if we break that bottom over here, we're going to start to move down, and it might move down quite quickly. So let's go back to a smaller time frame. Yeah, so right now it's moving around. It's probably going to come back over here and retest. So I'm not going to touch this stop loss right now because I don't want to get stopped out for nothing. My entry is pretty good. I would have liked to have seen this trade a bit higher, but this is good enough for now. So this trade I'm not going to touch. So it might reverse over here and exit me, which is fine. It's going to happen. But as soon as I can, I'm going to move my stop loss. When this low gets broken, I'm going to move my stop loss to break even to manage the position. So now we're going to look at our other position. All right. So we're in profit quite a bit. So right now we're testing these highs. So this is a critical point here. We're at the resistance, so you know we could get rejected from here and lose all our profits. So because I don't want to play the game of playing that range that we see here, let me just move on a bigger time frame. Yeah, so we're at the top of the range, but we're accumulating on top of this now support, which used to be the resistance of that range. And especially after a snap like this, I really want to be long on this. But at the same time, I've moved my profit, my potential, my stop loss so that I don't have any loss on this. But I'm pretty confident that this is going to go through. So yeah. So that's it. I've managed my position. I've moved my stop loss. Now I'm waiting for these highs to be taken out. And as soon, now I can't because the account is too small. But usually if I was trading on my regular accounts, what I would do here is I would add to my position whenever there's a close, whenever a candle closes higher than this over here, I would add to my position, protect the first entry. And then I would look on small time frames like the 15 minutes or 5 minutes even sometimes for a swing low to move my stop loss up as soon as possible so that I can have double the exposure to profits and mitigate my risk as soon as I can. But right now I'm just going to play by the rules, well, by the constraints that I have with the size of an account of $200. So I'll keep you updated. Quick update. Over here, the price has closed higher than all of these wicks from the candlesticks. So that's a very positive sign. Usually, if I had more margin, I would add to this position at this point and put my stop maybe below this low over here. But I don't for now, so I'm gonna have to build up the account before I start trading as I would usually do, because right now it's just too small and there's too much risk. But I just wanted to throw that out there. And over here, what I've done is I've moved my stop and my limit, because now this high, like initially the stop was around here, but now we're making lower lows and lower highs, and this low just gave. I think it's just a question of time before we close lower than that. So I moved my, because of this behavior, I moved my stop loss at this point. And additionally, I did a measure move from here to here. So I've moved my stop loss a few pips above the measured move over there. So I think this is a more favorable trade. So now I've reduced my risk and I've increased my potential for profit because time has passed since then. So if it would have just went straight down over here, I would have liquidated. But now the regression line has moved a bit farther, so I have to take that into account and try to maximize the profit that I'm gonna make over here. So usually a pattern like this, an accumulation, I think price is probably going to mess around in this zone and maybe have to test this area again and maybe accumulate a bit either below here or on top of the range and then move up. But it doesn't matter right now. My position is my position is protected. I can't lose any money on this trade. Theoretically, I can only make more, so I'm just gonna let this one ride and see what happens. And for this one, I'm expecting maybe tomorrow or so this target should get hit. So that was the update. Quick update, I made trade number 3. It's in the Euro Australian as well. I just basically added to my current position, and here is the rationale behind it. Basically, we broke this low over here, and now we're retracing into it. So what I decided to do is that since I've protected my my risk with my GBP with the pound yen, and I've lowered my risk on the second trade here in the Euro Australian, I decided to add to the position, and my plan is I want to see what happens, because I have a bit of experience with these with this type of pattern, and usually it ends up being a strong move afterwards. Like it's a real distribution pattern. So for that reason, I want to take some short-term profits as was my first idea, but I also want to see if I'm not able to get some more out of this. So my initial limit is going to be in this area for that trade, but it's entirely possible that I depending on what happens and how fast it does, I'm going to probably look for a move that's a bit bigger. So we'll see. Right now this is on the daily. This is what it looks like. I think it's possible that we will go test this zone over here. Let me just trace this a bit. So we'll see what happens from here, but yeah, that's what I'm thinking over here. There's a big bullish engulfing on this time frame over here, but I think there's a big chance that it's going to come to this trend line over here. So we'll see. We'll see how it goes. But this is trade number 3. All right, guys, quick update on the trades, the 3 trades that I started. One of them has been closed, which is this second trade here. I just wanted to show you that I wasn't bullshitting here. I've made these trades on my TradingView platform, but in the private section. The reason is that I don't want people to follow my trades play by play and be responsible if someone sues me. But what I want to do is basically make an account of these trades and have a place where I can send links to people from YouTube so they can verify that I've actually made the trade in real time. It was important for me to separate myself from all the bullshitting Forex wannabe traders that I see on YouTube. So this is a way that I found. So this being said, the trade that that closed today is this one here. Price penetrated the regression line, and I had a target over there. If you look at the update, the limit was a bit farther. And if we look here on the closed trades, so I made $9 on this one, net 145 pips. So that's a good good little trade there. I still have these 2 positions, and we're gonna make some moves here. I'll tell you why. So here, the pound, let me just zoom this in a bit. All right, so this is where we're at. So actually, I'm gonna go on a smaller time frame. Yeah, so we penetrated this zone here, and as I was expecting, price came back to test this zone here where all the wicks were, and then it accumulated. And this is very, very typical. Whenever you have a long ranging structure, once it's done doing its zigs and zags, as it penetrates, the way to identify these types of patterns that I found anyways, is that if you have a close on a candlestick that is higher than all the wicks, well, maybe not all, but most of them in this structure, then you know that something happened in the supply. So a shift occurred basically. So there was this range here. So one other entries that I would have had is buying into the test of this zone here, because price went beyond it. So now this previous resistance would be acting as a support. So as I mentioned in the previous update, normally I would have bought more here. I would have protected my first entry and I would have bought more. The reason for this is that whenever I see that I'm right about a pattern or a trade, I want to maximize that opportunity basically. So, but I couldn't do that because I don't have enough margin on a small account like this. Because this is a mini account, not a micro, and for that reason I couldn't do it. But it doesn't matter. Eventually I'll show you a full example of how I scale in positions and how I pyramid. But basically it did this range, which is similar to an SOS in the Y curve, but this is a weird, like, it's not the same, it's not a Wyckoff, as far as I'm concerned anyways. It's not a Wyckoff, but it's very similar in the sense that you have this big snap over here where price really broke down and got rejected right away and came back into this range, and then it did an SOS type. So even if it's not a play-by-play, I use the same concepts that I've learned from trading, from years of trading the Wyckoff and other reversal patterns to establish new positions and try to find the logic behind it. So now what's happening is that price penetrated this zone, this little square. So now it needs to test it. That's normal behavior. If I don't use volume a lot in Forex because it's skewed, but normally if it was a stock, I would look at volume, and if I would want volume to be diminishing here. And then as it starts to accelerate, I would like it to increase slowly to confirm the trade, but I don't find that I need volume anymore. I haven't used volume in years, basically. So so yeah, here it would be another point of entry. If I had more leverage, I would buy right here, but I don't. So that's the pound. And here, let's zoom in a bit. So the first position got the target was hit, the limit. And the second trade, what I'm going to do now is I'm going to lower this stop that was at this high over here. I'm going to bring it back to entry, because now I would consider this a successful trade, but my intention for this is to see where it goes. So basically the reason I bought, I went, I established two positions in this specific cross is I wanted to make sure that I had optionality to hold a trade for longer in this currency, because my opportunity, if I'm right about this being a big move and moving all the way here or in that area, or even break that trend line, then it's going to be difficult for me to re-enter afterwards. So, you know, you can always enter on a bounce, but the risk increases. So right now, I think is an optimal time for me to, was an optimal time for me to establish a long-term position. But at the same time, what I'm trying to do right now with such a small account is I'm trying to build it up as fast as I can. Not as fast as I can, but as fast as I think is relatively safe. And this is kind of what my goal with this series is. So right now, you know, big candles, I haven't seen a sign, like the candles are increasing in size. So I think that until I see candles decreasing, meaning that it loses momentum, like here you have a huge candle and then a smaller one, so you know momentum is diminishing. So I know that I'm safe still holding this. Well, I never know exactly, but I speculate. That's what I do. So I speculate that the momentum isn't quite done yet, but it's going to start diminishing with these candles. And I'll try to manage my stop loss to try to eventually lock in some profit, so that not only this trade is a successful optionality on an eventual downtrend that is stronger, but also that locks in a bit of profit and is successful in building the account. So that's kind of my thought process here with this. So yeah, we're seeing measured moves here. So yeah, I'm just gonna wait this out a bit. I think that I'm gonna reevaluate this. If it comes in this zone, I'll probably think about selling and maybe, well, not selling, but liquidating my short. And if I see that it bounces back around here, I'll probably short again. But I'm not sure. I'm waiting for I'm waiting for additional confirmations and patterns to emerge, and I don't know how that's going to play out exactly, so I need to be patient with this one. So step number one is bringing this the stop at the entry. So let's go here. So the stop is at 166.59 and my entry was at 155.79. So 155.79, and then we'll go for a bit of we'll remove the fees basically from if ever it reverses. So that's the this one is protected. So right now I have no risk. So what I have right now is optionality on the direction of two currencies, two crosses of currencies, and with no risk. So that's a position that I really want to be in. Eventually what's going to happen as the account builds is I'll try to build all these options basically that I have. I'll try to build positions in different crosses that are not as much related. Like right now I'm choosing Euro Australian and JBP JPY because there's not the same currency in either of these crosses, so it's sort of diversification. It's not perfect, but it's not bad. So next, what I want to do is I want to lock in some profit. So right now my stop was here. I brought it back to break even, but now it's showing me that there are signs that I'm in the right direction as far as the trend goes. So what I want to do is lock this in. So 169.31, let's call it that. So now what I'm gonna do is put my stop over here, so even if it reverses, I will have made profit on this trade, because I don't want to let my winners turn into losers. That's one of the rules that I follow. What did I say it was? 169.31. All right, so now we've made a minimum of $7 on this trade. And that's the update for now, so I'll see you soon. So now I'm going to show you the process that I go through in order to find a new opportunity. Right now I'm in the Euro Australian and Pound Yen, and I would like to have something that's not related, or at least not too much related to these two. So New Zealand Canadian comes to mind because none of the currencies are in these crosses. But you know, I can look for Canadian yen, Euro Canadian, stuff like that. So we're gonna try to see if we find an opportunity with these. So what I'm looking at here is the New Zealand Canadian. We just had a breakout from this zone. It was kind of doing a sort of a range, but like an accumulation pattern, but I have no idea if it's gonna keep going. If I wanted to, one idea that I could have would be that if it does some type of a range here, I could probably look for to buy on the new support over here. But first I want to take a look at it because this is a clear downtrend. It's making lower lows and lower highs, and it's the first time in a while that it does this kind of behavior. But I want to make sure that I don't get faked out, and that if I go long here it doesn't reverse in my face, because this could transform easily into a more complex accumulation pattern. It could be a head and shoulder, reverse head and shoulder. It could be a Wyckoff trading pattern, and so I'm kind of I'm worried about this one. So let's look at the bigger time frames. Let's look at the weekly. All right, so obvious supports and resistances. These tend to be like magnets. So if ever it breaks out of this, let's look at these. I'll just trace the most, I'll just trace the most obvious ones. All right, so this is, it's not a pattern that I would trade yet, but this is a pattern that could transform into a pattern that I trade often. And what this is basically, it's like a wedge. And what occurs often here is that the price goes beyond the previous boundaries of the wedge and then comes back in and goes aggressively up. Sometimes it goes all the way up here, but other times it goes all the way, it goes much higher. Trying to think of a trade where it did that. I think Next Gen was the last trade that I traded this pattern on. Yeah, so this is the idea here. You got a downwards wedge, basically, and then there's a move that goes beyond the wedge, and from there, as it closes inside of the wedge, then I start going long. This is a trade that I took in multiple sequences, but you can see the power of this pattern here. So yeah, another one, I'll show you that it's not a fluke. Ethereum. This is how I went long on Ethereum here. It made a triangle and then it went beyond the boundaries and then came back in. These are the kind of fake outs that you want to really pay attention to. So yeah, here there would be two potential trades. Either you short this because you think that it's right now testing this previous support that would now act as a resistance, which is likely, but this is looking very extended. And because of the fact that a price accelerated here, you see there's less time. If you compare the length of these waves, here it was taking its time, but here you can see that it's accelerating, like it's really getting a bit oversold, in my opinion. So for now, I would just keep an eye on this one. I don't think I would act right away. I would be more tempted to short here than anything else. But because the move has been so exhausted, I would wait it out a bit and see if it doesn't transform into a pattern that I know. Because right now it's not really showing me a clear entry. So unless it accumulates here and then it breaks out of that, then I know where to place my stop loss and go long. Otherwise, I'll just keep an eye on it. I'll make a note in my journal to keep an eye on it. So let's try to find another opportunity with the Euro Canadian. Let's see what's going on there. All right, so this is a reversed, a complex reverse head and shoulder pattern. I know this is a mouthful, but I'll show you real quick the gist of it. Where's the head and shoulder? There it is. So price is coming from here, and then so you have the base of it. Why it's a complex one? It's because there are two waves within the shoulders. So they don't have a complex pattern here. So I'll trace another one with this. So sort of, it's like you see there's two head and shoulder patterns because there are three different two left shoulders and two right shoulders basically. So this is a reversal pattern. So this is a good good sign, especially after a long downtrend like this. I missed this one. There was an opportunity to enter here on this on the test of the support. So right now, this is kind of the support that we have here. This is a Wyckoff reaccumulation type 2 pattern, sort of. Basically you have this range. And the price accumulated over here a little bit, and now it's breaking out. But you see there's strong rejection over here, so let's look at the weekly to see what's going on. So I'm just going to trace my supports and resistances, the obvious ones. I think I would sit this one out. It's too I think there's too much potential for this to go into really choppy territory. Like you see this is a very big zone, and I'd probably try to trade once it goes through this, basically, because right now it could go here and keep bouncing off of it until people make up their mind. And this is a clear downtrend still. Right now what it's doing is it's attempting to make a new high, which would appear over here. But it's risky business. If we look on the daily, we might see a pennant. Yeah, over here. I mean, this is a clear, this is a breakout, but I don't know. My spidey sense tells me that I should wait here. So I'm not going to do anything. I don't have to. Canadian yen. Let's look at the 4-hour. All right, so there's some obvious supports and resistances here. Over here we have, this is called a megaphone. This is a reversal pattern. So the opportunity to short was around here. The potential for profit, like here, you would, I would take my profits around here. Let me just trace this. But it's quite in the middle. If you were to do a regression of this, it would look something like this. So for a short, it might be a bit too late, but this looks like the distribution pattern. Let's look at the bigger time frame. Oh. Okay, now this is very interesting. Yeah, now I would be so what I'm seeing here is that we had a really long period of uptrend from 2020, and And this looks like a distribution pattern. So, and right now there's big rejection from this candle. This is a weekly candle, so it's very meaningful. So I think I will short this, because if ever it breaks out of this support here, this would be taking the very top of a bear move that could last for hundreds and hundreds of pips. And it would be very aggressive to the downside. So what this tells me is that by looking at a bunch of currencies related to the Canadian dollar, what this tells me is that there are a few potential reversal patterns that are related to the Canadian dollar. So the more I find by looking at crosses with the Canadian dollar in it, if I see that there's a bunch of reversal patterns on different crosses, then I can find an entry on one of them. And this one looks very, very interesting. So how would I enter this is the question. So this is the current short-term resistance. So I would say that this zone here is the current resistance of this. I would probably wait for price to come over here and then initiate a short position and put my stop somewhere either around here or here, because if I'm wrong and it reverses, you know, there's no point in because it could go as high as this, you know, because this is the main resistance right now in this pattern. But because of this behavior here, this shows that it's there's uncertainty, because someone shorted really heavily here. Well, a bunch of people shorted here, and then right away it got bought back because people think it's still a long, because it's been a long-term uptrend. But eventually price stabilizes and people give up on their positions. So here I think that this is I think if I shorted here, there's a high probability that it will go at least here, and that it will potentially break this. So this is a long-term trade. So I have to think twice about establishing a trade like this, because with such a small account that I have right now, it's freezing up a lot of the a lot of margin. So yeah, I'll think on it a bit, but this is a potential. I'll take a look at it and see if I can find an entry around here, because I don't like what I'm thinking now is that I don't like the fact that this is rejected like really aggressively, and the bar is closing in 13 minutes. So I'm thinking that even if I shorted here, I think I would get a better price somewhere around here. And I think it's going to test this before it goes further, so I'll keep you updated. In an effort to find another trade, I've tidied up the place a bit over here. I've put all my US related pairs over here, and I've got some commodities up top that will trade eventually. And I've got some of my minor pairs that I'm gonna that I've currently have positions on, and I'll trade eventually. So right now what I'm thinking is I would like to have a position that is against or for the US dollar. So I'm gonna show you the process of analysis that I go through in order to find some trades or potential trades when I trade the US dollar. So normally I trade directly the US dollar, but right now the account is too small. So if I was to open, let's say, a trade on the US dollar, over here it says 260 and my account is 257 right now in equity. So this is way too big and the volatility per pip is too big. So the next best thing to do in this case, if ever you have a very small account and you want to grow it, is to use the other crosses that have less demands for the margin. So let's go over that process real quick. So let's look at the US dollar first and analyze that and determine what direction I want to take a trade in. This looks like a double top. This is an Adam and Eve double top. I'll just zoom a bit so you can see it better. Yeah. So the way to trade this is that this is your neckline, and here you have your two tops. And the way to differentiate the two is that the Eve part is flatter. So you see it kind of range over here. And now you have this breakout that is occurring as we speak. So we're going to have to act quick here. So that's the rationale behind it. And now I want to bring your attention to something. Over here you have the same type of pattern that I was trading on the Euro Australian, where you have some type of range or expanding megaphone if you want. And over here there was a rejection. So what happened here, let me just remove this for the sake of clarity. Over here what happened is that you had this range, and here you got a bull trap. So whoever went long, the bulls, got their foot in a trap over here because it reversed aggressively. And these type of moves occur when institutions are trying to get filled. So sometimes they're going to drive the price up until they reach all the stop losses and they get people on the bandwagon to go long, and then they'll use that increased volume to short the market aggressively, and then everybody has to reverse. So it becomes a very low risk trade for them because they get in profit really quickly. But you know, regardless of institutions or not, all you have to do is understand the shifts in the supply. So over here, this is a very good sign, very bearish sign. So now it stabilizes and then it goes beyond the megaphone. And this is what I expect is going to happen over here on the Euro Australian, small parenthesis. Same type of pattern. So you got the megaphone and you got the rejection. Now I expect this to stabilize and eventually come here. And if it penetrates this trend line here, we're going to see a long-term bear move on this cross. So if we get back to US dollar, let's go on the 4 hour. We have our double top, which the Eve part of the double top was an extended megaphone with a switch in supply. So really good sign. Where's my line? All right, so this is bearish. So I'll put my line red if I can click. Okay. So that's the basic idea that I see on this time frame. So now let's look at a bigger time frame. Let's go on the weekly. Okay, so this is an exponential move. These usually end very abruptly. So All right, so this is a in the category in the same ballpark as a wolf wave, I would say. So let me show you what I mean. So if we connect these two highs and these two lows, we get a distribution shape, a form. So what happens here is that price bounces off of this and then goes beyond, and it's the same principle as what I was showing earlier with the triangle. So these type of let me just set this real quick, give me a sec. So these types of moves where the price goes beyond a previous resistance in this case, and then comes back aggressively, usually signifies that we're going to enter a long-term downtrend, well, relatively to the time frame that you're using. So is it possible that it's going to continue forever? Sure, but in my experience, the best way to trade these, especially if you zoom in the time frame and you can find a double top like we just did on a smaller time frame, then I got a pattern into a pattern. So right now, this is an exhaustion pattern. This is a wolf wave, a bearish wolf wave, if you want. Anyways, the way that I trade them. And we have a double top over here. So I really want to take a position here on the US dollar short. So I want to, now the next step would be to compare which crosses are favorable for this. So what I do here is I'll use the function here, compare or add symbol. All right, so now we're gonna put these here. I'm just gonna put this out of the way. So we got the euro, we've got Great Britain pound, we've got the Australian, we've got New Zealand, we've got the yen, we've got the CHF, and we've got the Canadian. So if I look on the at the bottom of the last wave, which is about here, and I zoom in a bit, I can see which pair, which cross is stronger or weaker relative to the US dollar per se. So it's very obvious that the yen over here is the prime candidate because it's above 40% from where it started over here. And here you have the New Zealand dollar, followed closely by the euro. So these would be the two crosses that I would like to take a position on in order to make a move on the US dollar versus the US dollar. So I would short US yen and I would long New Zealand US. So now next step is to take a look at those. So let's take a look at the yen first. Yeah, so very, very aggressive move. We have a rejection candle over here. This is called a shooting star, so very bearish. And you see this is almost exponential. So this would be a good candidate. And you see these type of patterns here, this is liquidation. This is a change in direction with high volume, most likely. Give me a sec here. I'm trying to figure out which supports and resistances are relevant. Yeah, so this is broken already. Yeah, so next support is going to be in this area, and then most likely here. And then I'll trace my horizontal supports. These are zones that I would have to keep an eye on when it reaches that. Yeah, so you see here how it price bounced off of this, came back, penetrated, came back, tested, pulled back, tested, and went back. So this is an important zone right here. So I'll probably have that as a profit target eventually. This one is close to this, so like I already know that's going to be choppy over there. I've got this one here, which is a minor one, I would say. All right, so let's look on a shorter time frame. Yeah, this is a short. Like if I'm willing to go along with the bumps, like it might mess around here before it makes a go, but I think this is very, very bearish. You got a huge bearish engulfing pattern over here. Price went beyond the resistance and got rejected aggressively. So that's a good sign. But again, this is a long-term pattern. And you see, earlier I was looking at Canadian yen, which was also showing on the weekly a distribution pattern. So what this is telling me is that the yen is a good place to be. And the US dollar is not. So if you trade this pair, you basically have the combination of the best of both worlds. So it's likely, knowing this, it's likely that my JBP, JPY is gonna unravel, and I'll be stopped out with $7 in profits. But that's okay, it's still gonna be a successful trade. I don't have any risk on it, so. All right, so I'll take a look at this a bit more, and I'll probably short this. But before, we need to take a look at New Zealand dollar, because this was the next contestant. All right, so same type of oversold pattern. Yeah, price got rejected quite aggressively. Might be choppy, but I think it's a potential long over here. Let's look at smaller time frames. I messed it up. Sort of. If it was a bit, I would have liked it to kind of do something like this here. But you get the gist of it. Like basically this is your neckline. So in a Wyckoff, this would be a Wyckoff type, an accumulation pattern type 2, basically, where the wave doesn't go beyond. Stays there, so this would be the SOS, basically. And it continues to higher highs. So looking at this time frame here, we see rejection, so it's likely that it's going to bounce back off of this. So I'll look for an entry. I'm not in a rush here, but the yen looks better to me. But both look primed to retrace a bit, so I'm gonna take my time with this one and try to enter on either or of these two crosses. So see you in a bit. All right, so this is trades 4 and 5. I'm going to explain exactly what I saw over here. So let's start with the USD yen. As I was explaining, my goal was to take a position against the US dollar and trying to find a cross that would be overextended. So I decided to enter the position, even though I think the timing is really bad. I would have preferred to enter around here, but I'm willing to have some volatility and for price to come back over here before it makes its move. But I don't want to miss the boat either, because this could be very aggressive to the downside because of the way this is shaped. It's very abnormal for price to go as high as it did right now. So I think the reversion to the mean is going to be quite violent. So that's why I entered that position. And the next one is over here. As I was explaining, there's a triangular shape over here, and this little dip below that, and price getting back in, I couldn't resist, so I bought a little bit. It started to accumulate a little bit over here, and it's I saw this as a sort of like a sign of strength in the Wyckoff, well, whatever the name you want to give these accumulation patterns. But this is why. So this went out of the boundaries of this previous accumulation phase and then started to range over here. So as I saw that the market was going higher, I bought a little bit. So right now my target is very conservative. What I did is that if you look on the weekly here, there's a few waves over here. So I took these two waves, and this would be approximately where I would take profits if it was to go there really fast, because I think it might bounce off of that. But ideally, I would like to keep this position and try to ride it for bigger profits. But as I was saying, since this is a small account, I need to take into consideration the margin requirements. So I can't really pyramid into positions. I can't hold positions for too long. So I'm going to try to snipe a few trades to get the account going. And once I see a very good opportunity for pyramiding, I'll try to show you guys how I do that. So yeah, these are the two trades for now. Oh, I forgot to show the trades, just to make sure that to show everybody that I'm not doing any shady business. So these are my entries. They open. I haven't put a stop and limit on this one yet. I'm not really worried. I'll set that tomorrow, as I have to go right now. So. All right, I lost some footage, so I'm going to try to recap what happened in the last couple of trades. Basically, if we start with the pound yen, what happened here is my stop loss. I had placed my stop loss over there, and it went and caught me. It went against me quite a bit there, but since I was out of the trade, that's not too bad. But what happened after is I saw this big white candle and I re-entered. So I lost this basically in the trade. I made like, I think $7 on it. Yeah, I made 112 pips, but I made $7 instead of making a lot more. So that's kind of a bummer. So now I'm in negative, but I still think that there's a high chance that it's gonna go there. My stop is below this range, because if it does break beyond this, I want to get out. So I hope I didn't compound the error here, but I think that this is normal behavior. I just made a mistake of placing my stop so close. And the next one, I did the same thing. I basically placed my stop too close. What it did is it went to get my stop, which was around here, but I was able to recuperate this one because I shorted there. I'll show you. This is pretty bad. Yeah, this is the last trade that I took. So as I realized my mistake, I was like, okay, no, there's no way this is gonna reverse in my face. So I shorted right there, and poof, price went down. So now I'm up over 100 pips, 169 pips on this trade. So I recuperated the mistake. So this one worked in my favor because I entered higher, but the other pound, I definitely lost some potential profit there. My hope is that the Euro Australian keeps going and that the pound resumes its uptrend, but you know, whatever happens, happens. And my other two positions, let's look at the yen. So yeah, I entered a bit impatiently there, but I don't want to miss this boat either. And sometimes when you try to play too much for a couple pips, you lose the entire move, and I didn't want that to happen. So on the long, this is I'm going to keep this trade for a very long time, I think. Several weeks, most likely. And New Zealand CAD this is my least confidence trade. Which ironically often ends up being my best trades, but we'll see. So this one is showing signs of rejection, but the daily hasn't closed yet. But if it closes like this with big rejection, I'll probably exit the trade because I don't want it to come back here and be stuck into a negative trade for days, you know. So we'll see how it but right now it's acting pretty good. Like these rejection candles at the support are good. What I want to see here is I want to see price break this high, and then I'll be golden. I'll protect my entry and I'll just let it ride. So what I want you to get from this is that what I'm trying to do right now with such a small account is that I'm really playing my stop losses a bit closer than I usually do. But my goal is to preserve capital at all costs. So the goal is to make small improvements in the account size, but at the same time try to protect my capital as much as possible, because I don't want to bust this small account and have all these hours of shooting and telling my process go to waste, so to speak. So we'll see how it goes. All right, today is October 30th. I thought I would do a recap of the trades of this week in a quick format, because I don't want to repeat myself too much. And I did this presentation because I want to make a short version of these long videos that explain every trade by trade with all my thoughts. So let's get started with trade number one. This one netted 112 pips. It was based off of the pound yen. I saw a breakout on a long-term weekly pattern, which we will see later on, and I looked for an entry. I made a few mistakes on this trade, namely to bring my stop too close. I locked in some profits eventually, and the stop got hit, and I'll show you here. Basically, the entry is over here, and then it went up, and I had placed my stop loss over here, locking in these pips, and then it came to get my stop consolidated, and then went back up. I eventually went long again on this trade, and I kind of panicked over here when I saw some rejection over here, but eventually it went through. So I made some profits, but I definitely didn't maximize my chances on this trade. So let's move on to the next one. Trade number two is Euro Australian. This is a pattern that I trade not often, but that I've been trading for years. I'll make a video on it later on. But basically, I took a short over here as I saw a sign of that the price had been rejected from this level after a downwards megaphone, and I traded against the regression. I lowered my limit. Over here, you can read the comments and pause if you want, but basically my original limit was here, and I decided to move the limit a bit further down the regression line because time had passed and the regression was getting lower and lower. So I had a good feeling I could exit on this. So I made 145 pips on that trade. The third trade is this one here. I added to the position, and I made a mistake here. I should have taken my profits at the same time as the other trade with the regression. But my idea at this point was to try to pyramid into a position, into a long-term position on this pair. But what ended up happening is price. I had placed my stop loss at the entry to protect so I don't incur a loss. And what ended up happening is I got a +5 trade on this because I got stopped out over here. Realizing my mistake, I made another trade that we'll see later on. But this ended up being a flat trade instead of a positive trade. So that was a bit of bad execution on my part. Trade number 4 is based off of the US dollar. Basically, there was a blow off from the across this resistance, and right now what I think is going to is likely to happen is that we're gonna, because of this exponential move, I think it's likely that we will, if it comes back over here, we're likely going to go back to this regression line, or at least in this zone over here. So I'm planning on shorting this and holding the trade for a little while. Next, so from the US dollar, because I don't have a lot of margin on a small account like this, I decided to go short on the US yen because it was the pair that was the strongest, basically. are the weakest against the US dollar, so I thought it would be a nice reversion to the mean type of trade. So I shorted over here. It's my entry wasn't really good because I wanted to make sure I didn't miss the move. But in hindsight, I should have just waited for shorter time frame retracements in order to enter a short. So right now I'm in the negative, I think $8 or something like that. We'll see the results later on. But so that was trade. This is trade number 4, and it is ongoing. Trade number 5, I lost 13 pips. Basically, I was expecting price to move back inside of this wedge formation. And because of this type of accumulation, I thought it would move back in, which it might still do later on. But I got spooked because price showed on the daily, I saw 2 candles with high rejection, shooting star type of candlesticks. So I thought that perhaps it will come back down and at least to this resistance. I didn't trace a line here, but I think it's going to move at least there and either go break that trend line to keep moving downward, or accumulate over here in that zone, and then it will go back in. So this is a setup that I'll still keep an eye on. I consider this a flat trade or so, but with minus 13 pips, but it's no big deal. But I didn't want to get stuck and freeze margin into a losing trade. It's just, I wasn't interested in that. So so yeah, this is how I got out. You can pause here if you want to read my comments. Trade number 6 is the same pound yen setup. So I re-entered after I got stopped out with profits on my first trade. I got back in, but this is not the this is basically I just did this because I didn't have time to record when I was actually getting out of this. But I think I got out around here. But I got some profit on the trade, 49 pips, but compared to the risk that I took, I should have just held on to it and not, but it was Friday, I wanted to get out. So the trade, these 2 pound yen trades are based off of this pattern, basically, well, pattern of this price action. Basically, price got out of this trend line. It tested it more or less, and now I'm expecting price to keep moving up. So in the next few weeks, I will try to wait for retracements on the downside to enter a long position if I see some short-term setups showing up. The other trade number 7, is on the Euro Australian. This is the 3rd trade on that pair. It's all based off the same setup. When I realized on the second trade that I had been stopped out because I had entered in that zone over here, it went here and then it retraced and got me out flat. When I realized that, I was like, okay, this is still a short, so I corrected my mistake and I shorted again. So this is basically a continuation, a reproduction of trade number 2, but at a later time. And surely it really puked hard after I entered. I should, in hindsight, I should have got out on the regression over here, but I didn't. But shoulda, coulda, woulda. So this is still an ongoing trade, and I added to that position over here. So now I have 2 short positions at different levels on this pair, and what I'm hoping to see this week is for price to get down over here in this lower zone and try to establish a position here. I'll probably close one of these trades because I want to free up some margin so I can trade something else, and we'll see if we can break this trend line eventually, but I'm not holding my breath. I'm going to play this as I see it, as I see some price action going on. So still ongoing. So this is, I did 8 trades in the first week of this little experiment, and 5 of them are closed for a total of $19 on a 200, I think it was 228 account, $228 account, 20 bucks. So that's what, maybe 4 or 5% increase in 1 week. But I still have 3 ongoing positions, one at -8, one at +2, and one at -2 or so. So for a total of -$7 plus the $19 over here. So that would be about 5% gain net. But so yeah, this is the week number 1. So I'll see you in the next video about week number 2.